Looks like it. Okay, rock and roll. Welcome everybody. Sorry for the delay there. For some reason I had to invite myself to speak on Discord, but we got that figured out. Happy Monday, everybody. Welcome to our weekly developer Q&A, AMA, whatever you want to call it, with the core engineering team. This is a place for all builders here at Quai Network to come and ask their questions of the core team, get answers, and have a fun discussion to kick off the week. It's a big week over here at Quai Network. We are right at the finish line, guys, of getting Project SOAP out the door. The team has been burning the midnight oil. They were working over the weekend, up late. I see Dr. K and Shakara, Alan, Jonathan just going ham on this thing nonstop. And I know a number of you have a bunch of questions. I've already seen the infamous wall of questions from Kishore here. Shout out to Kishore, one of our key ambassadors, who fields a lot of these questions, elevates a lot of the questions from the community. So tip of the hat to him for kicking us off with some good ones here. I had an interesting request during my live stream last Thursday. We figured out how to stream to YouTube, guys. So if you haven't seen it, Christopher and I were hanging out on X, YouTube, and Twitch, and we were vibe coding. We were building some dashboards to track growth and just some of the metrics that you guys have been asking for, as well as the BDM team over here. And so we've been working on that for quite a while now. It's a pretty monumental task, I'll admit, just collecting. Anyways, I digress. We were streaming to YouTube, and a lot of the folks tuned in on YouTube and asked a bunch of questions about Project SOAP, but we do have one request to bring Shakara into these spaces, so not sure if he's going to make it today, but we've definitely taken note. Looks like Jonathan is hanging out down there in the audience, so I'll go ahead and shoot him an invite to speak here. And before we kick it off, just another bit of housekeeping. So if you're hanging out with us on X, love to have you. Glad to see it. Welcome. Definitely want to give the Quai Network account a follow. We got a lot of stuff cooking, but we are simulcasting from Discord today. We do this every Monday and Wednesday. If you want to join in on the chat, check the link pinned up above and hop in to Discord. The event is live now, but if you can't do that, feel free to drop your questions here on X, and we'll get to them in the back half of the call if we have time. I already see a few comments, so we'll jump back over there towards the end of this call and see what questions there are over there. But highly encourage you to join us here on Discord. The community is a ton of fun. Looks like we got Jonathan up now. I'll stop my rambling and check in with Jonathan. Jonathan, how you doing, sir? It's going. All right, I need to do a quick... no, doesn't look like it. And I might be messing up some of my audio here. Let me check something real quick. I'm not sure you're coming through on X. So let's try that.
You can join it.
There you go. No, you should be good now. That was all me. For those community members over there on X, let us know if you can't hear Jonathan. I'm going to ask Jonathan, how's your weekend, man?
It's good. Got some work done. We were doing a lot of testing this weekend, and the testing all went well. So we're gearing up to deploy to testnet, or for testnet. Yeah, I mean it's been a lot of work these past couple of weeks, working weekends every day pretty much. But yeah, the testing is going well.
Rock on, man. Rock on. Glad to see it. I know the community appreciates it, and we all do as well. You guys are working really hard over there and still making time for the community here. So really appreciate that, sir. hope everybody else had an amazing weekend as well. We already got a wall of questions, Jonathan. So anything you want to mention before I kick it off?
No, yeah, happy to be here, guys. Happy to answer any questions you have. Maybe next time we'll get in pointers to answer some questions. He's more knowledgeable about the specifics of the controller and stuff like that than I am. But yeah, happy to be here.
Sure. Yeah. Thanks, Jonathan. Really appreciate it. Yeah, we got a wall of questions already, folks. Just a reminder, if you have questions for Jonathan or myself, feel free to drop them in chat. We had an amazing space last week with Shai. It's always really fun talking to Shai. I just I love his perspective and the way he thinks about things. And we got a little bit of an alpha from him. He might be working on some new stuff real soon. But the very first question is pointing to an X post that Shai made post Quai Friday. And so I was just wondering if you had any other thoughts to share about the space. The X post is about 3 short paragraphs long. I'll just call out one thing that he mentions here. Shai says, one thing they pointed out that I haven't noticed before is how well merge mining melds with workshares. By only allowing merge miners to mine shares, you avoid coupling the security of Quai to the subsidy coin. And then there was one other question. I'll go ahead and ask this. He says, there's one question I wish I thought to ask during the space. How does this affect chain growth? Can incentivize miners to only mine shares affect the statistical finality? I think there's a case to be made about forcing a fraction of the shares to be non-merged, which SOAP already does. But he was wondering if you had something to add. Did you see that post by Shai, Jonathan?
Yeah, I did. Not really sure what he was referring to, or how I can limit chain growth or affect chain growth. I didn't really understand the question. I didn't have a really good response because I didn't really understand the question. Like, I'm not sure how it would affect it. I mean, you got all these miners, mining shares with different algorithms, and there's an analysis that could be done there. Like you can do an in-depth game theoretic analysis. Off the top of my head, though, I can't really think of why it would affect it. Um, if you want to stop chain growth, you wouldn't workshare angle. You would want to attack it from the block production angle. If you want to
Right.
stop chain growth or affect chain growth in a meaningful way, you'd have to be on Kapow only because Kapow produces blocks. So I think it was just like a misunderstanding on his end. Perhaps he thinks that you can produce blocks along with shares with these other algorithms, and in that case, there's some consideration there for sure. But because it's all Kapow, I'm not really sure how you can affect chain growth, even if you somehow make shares less lively. The liveliness of the shares doesn't affect chain growth. Is basically my response.
Got it. Yeah, that was an amazing conversation. My biggest takeaway was, his first comment was, it sounds like it's a really solid attempt to solve a problem that's been, a sore in his eye for a really long time, and that's, as a proof of work chain becomes more popular, all it does is increase sell pressure from miners. So I absolutely love that perspective he has there, and the fact that we're actually addressing something that has been an issue for him for quite a while.
Yeah, it's a big issue that is worth solving. But it's bigger than just buybacks. It's a real issue in proof of work economics.
Yeah, 100%. Rock on. Great way to kick off the space, Kishore. Really appreciate you bringing that up. Moving right along here, Noah is asking, does the SOAP emissions controller adjust for both underutilization and overutilization of mining pools? Are those adjustments in rewards discrete or continuous? Noah's been deep diving some of the code, so shout out to Noah for going ham on that. he says, like, I got to find it in the code again, but I saw discrete steps of like 70%, 80%, 90% of subsidy hash rate, rewards adjusting on that type of schedule. Are these emission adjustments the same as adjusting KQuai? And thus, if they do, they'll affect conversion rates? Question mark. That's a lot. Do you want to? Does that question make sense? And yeah, what are your thoughts, Jonathan?
Yeah, so when there's an underutilization, it'll be much more profitable, which incentivizes miners to switch. That's kind of the main incentive for miners to switch from Bitcoin and Dogecoin and all those other chains to Quai is because it's going to become very profitable to mine Quai in the beginning, much more profitable than Bitcoin, and then it'll kind of even out based on what the market prices at Quai at. And so if miners think that Quai is going to be worth a lot in the future, they might mine Quai more than Bitcoin. It might become the case that Quai is less profitable than Bitcoin, but in the beginning it's going to be more profitable. Overutilization, though, there's a controller to prevent overutilization, meaning just because there's a lot of people mining Quai doesn't mean that they're all going to be profitable, right? The profit comes from the amount of Quai emitted per day in proportion to the hash rate. So basically, if the hash rate keeps growing, the amount of Quai that's given to that hash rate increases logarithmically, but not linearly and not proportionally. So over time, it will become less profitable. If the hash rate continues increasing and the price of Quai does not increase, the profitability will go down. Now, if the price of Quai increases with hash rate, which is what normally happens, it'll maintain profitability like throughout the time period that they're both increasing. There's a difficulty control though to prevent from like too much hash rate from overmining or overutilizing Quai. But underutilization is really just a matter of profitability. It's just going to become more profitable if it's underutilized, which incentivizes miners to switch, which is what we want. The adjustments I think are continuous. I'm not really entirely sure, but that's what I thought when I reviewed the code. It seemed like it was a continuous function and not discrete. He's saying he saw steps of 70, 80%, 70, 80, 90%. I mean, I didn't see that. I'd have to see like where in the code that is. So like actually look at the code that he's talking about. Maybe he just misinterpreted it. But that's more of a question for Dr. K because he actually wrote that code, right? So Dr. K would be able to answer that question a lot easier. He probably has an answer for that already. He's just, we can't really ask him right now because he's working. But that's like an answer that he definitely, can answer, or a question that he can definitely answer.
100%. But really appreciate you walking through that, Jonathan. Incentivizing miners to switch using that profit motive there. And then, yeah, guys, we will also be sitting down with Dr. K on Wednesday. So I'll pin that for Wednesday space. Thanks, Jonathan. Great question. Noah, I see you going ham on the QA iBot. So shout out to you, for diving deep there. We have a quote of a conversation here where folks were working through some of their issues with the JavaScript SDK. This is a good one for you, Jonathan. I'm just gonna read the conversation here. It's pretty short. So Lord 4T6 is saying, I don't think the JS SDK given to me works because I try to access it through WebView in code, but it gets stuck. Does anyone have an idea on how to handle the protobuf encoding issue? And then Levi Carter replies, add the missing polyfills because WebView doesn't support them. Your protobuf encoder is freezing because WebView lacks buffer text encoder. Are you familiar with WebView? This is a little out of my depth. I'm not familiar with what they're talking about here.
Well, in mobile development, WebView is like a browser.
Yeah, okay, mobile dev. Got it.
But we've been able to use Quais in our mobile wallet, Blip. It works. So it just depends on the context you're using it in. If you're trying to use it, it should still work inside of a WebView. He's saying, I mean, some polyfills are necessary potentially for using it, but that's weird because I didn't have any issues with it. But I also didn't build Blip. I wasn't the lead engineer on the Blip app. But from what I understand, we're using Quais in Blip and it works. I'm not sure if it's open source yet. Maybe we should just open source it to give these people like some examples, right, for mobile development. Mobile development, especially in JavaScript, is always a lot more complicated because React Native is cross-platform, so it has to support iOS and Android, which is actually a lot more difficult than you think it would be. Supporting or building cross-platform apps in JavaScript sounds simple in theory, but it actually becomes really, really complicated when you have these like issues that don't make any sense. So this might be one of those issues that doesn't make any sense. So I can't really help him because I know that we've done it. So I'm not really sure what the issue is for him.
Yeah, fair point. Yeah, WebView. Okay, that's clicking now. This gentleman is building a mobile app. And it's my understanding, Jonathan, that Blip leverages a lot of the initial base from the Quai Mobile Development Kit. So I'm going to go ahead and paste that down below. There's probably a very good reason this builder is using WebView and not the MDK, but we also haven't pushed this a whole lot, so they might not be aware that the MDK exists. So let me also, I'll go ahead and tag those individuals as well. Maybe they can see this. And then we'll move on to the next one. But shout out to mobile developers. That is not an easy task, especially going between Android and iOS. So tip of the hat to you guys for working through that. Cool beans. Yeah, I hope the MDK can help them out. So I'll tag them here in a second. But if you didn't know it exists, I totally understand why you're using WebView. Rock on. All right, moving right along here. Another question from Keyshort. Have we defined or mentioned how often buybacks will happen? In other words, will buybacks happen multiple times per day? Or does the system trigger them based on parent chain Coinbase accumulation thresholds? Good question.
I don't have a good answer. I think it's basically we're going to get all these funds, and the market maker is going to auto buy when they get the funds. There's a Coinbase maturity period, right? So I think some of the chains it's like a day. You mine a Coinbase, you get it a day later. It's like a lockup, right? Like a day. Sometimes it's like 2 days. After that, we would take those funds and buy back Quai, but it's kind of based on the market maker's decision. We're going to keep tabs on it to make sure that it happens often. Then.
Okay, rock and roll. Rock and roll. Good question. I know the community's super interested at. First things first, folks. We're gonna get SOAP into testnet, but the team is definitely thinking probably 4 or 5 steps ahead at this point. All right. Next one here is the buyback logic meant to be fully automated long term, or is manual execution just a temporary stopgap until SOAP goes live? Great question.
It's not manual. It's the market maker that does it. So market maker will have control of the funds. I think the long term goal. I mean, it's going to be automated either way, but the long term goal is actually to get it on Quai itself. So what we want to do is get these assets on the Quai chain, like wrapped versions of these assets, and then we'd want to sell them for USDT on Quai and then buy back Quai with USDT on chain. I think that's the long term goal. We're working with stablecoin providers right now to try to get a stablecoin deployed, and we also have the wormhole bridge integrating. So, that's just going to take the time that it takes. But once that's completely stablecoins on chain, we can do the buybacks on chain. But for right now, it's still automated. It's just being done with a market maker rather than like on chain, which is what we'd like to get to.
Rock on. Oh man. Lost my audio again. Can you hear me, Jonathan?
Yeah, I can hear you.
Okay. I'm trying something new out, guys. Hopefully the mic was better while it was working, but now we're back to the old one here. Okay. Great answer. Really appreciate that, Jonathan. Yeah, Dr. K's kind of teased at future designs here, and potentially alpha for you guys. I don't think we've mentioned this yet, but yeah, team is actively working with some stablecoin providers to explore that opportunity. So bullish, love it. Thanks for sharing that, Jonathan. Really appreciate it. Rock on. Okay, next one here, another buyback question. When a buyback happens, how does that flow into staking distributions? Is it instantaneous next epoch or on tranche maturity? Not sure if we've explored that yet.
Yeah, that's a good question. There's going to be a staking contract that has all the Quai in it. It probably is not going to be instantaneous. Again, it has to be withdrawn from the exchange. We're going to try to make this as automated as possible. So we still have to build software, I guess, to withdraw it. So to start, it's probably going to be manual. The swapping, all this stuff is handled by a market maker. The withdrawals, I guess, will have to be handled by us from the exchange because we have to use a centralized exchange for this. So, yeah, we're going to have to write some software that withdraws from the exchange periodically and just deposits it to the staking contracts. So that, it can happen on a daily basis to start, I guess, as like a manual process. And then once it's automated, it'll probably happen more often than that. It just depends on when the funds get converted into Quai. Yeah, I guess daily is probably reasonable to start with. Again, like the rewards, are going to be there, in your wallet, in your balance, that is, in the contract. So you don't really have to worry about it too much. I guess the worry is, right, we want to make sure the contract is solvent when we withdraw. So it's like when it comes time to withdraw rewards, you want those rewards to be there, and we'll make sure they're there.
Rock on. Yeah, I definitely have heard Dr. K share some thoughts on this, so we'll follow up on Wednesday as well. Appreciate you sharing your thoughts there and your perspective, Jonathan. This next one here, I might need a little bit more context. Kishore, he asks, is the 4,000 block window size ever expected to be adjusted in future forks or as network usage becomes more predictable? Are you familiar with the 4,000 block window size? What window are we referring to here, Jonathan? Do you know?
He might be talking about the Coinbase lookup. It's more than 4,000 blocks though, so maybe he's talking about something else. But if he's talking about the Coinbase lockup, which is more than 4,000 blocks, that's that's up in the air. For now, we're going to stick with it, but it might change in the future as the Qi supply grows, as the monetary base grows. We might change it.
Got it. Yeah, it looks like that's what he was referring to. He says approximately 4,000 blocks. Cool. Rock on. Let's see here. Axton is asking if the Quai Mobile Development Kit is open source. Yeah, it is. It's the Apache license version 2.0. Let me know if you can't access that. It should be public. But yeah, 100%. 100%. That was built specifically to help mobile developers kickstart their projects, and it's fully functional as well. I tested it a while ago, actually. So check that out, Axton. Hopefully, that's what you're looking for, and feel free to follow up if you have any more questions. All right. Let's see here. Gabriel has requested to speak. We're going to bring you up, Gabriel, and then I'll move on to the next wall of questions here. Welcome, Gabriel. Happy Monday to you, sir. You should be able to speak now.
Awesome. Thank you so much.
Yeah.
Cool. Learning all kinds of new things. Okay, so my first question, which was actually my last question, but I was just doing some background research on it. I'm wondering, okay, so if you were Jonathan, if you were say you're in an elevator with Mark Andreessen and you're trying to persuade him that proof of work is the future of blockchain, because they're very interested in crypto, but they're kind of entirely focused on proof of stake. I was just kind of wondering if you could rehash the evidence that we have, for a skeptical outsider, that Quai can actually scale, because right now, obviously just because the network is still growing, we haven't actually shown the ability to reach 1,000 TPS. And along the lines of that conversation, I forget if you were participating in it, but it was a couple weeks ago, and I was listening to the recording. It was Dr. K was in there, but it was about like, is TPS bullshit? Like everybody's like, oh, hypothetical, 50,000 TPS, but then it's actually not. And I was wondering if you could rehash the most demonstrable. Of course, there's the theoretical, and we know that in principle this should work. But I was wondering, like, what's the closest thing that we have to actual to demonstrated evidence that we can actually process like a high throughput of transactions better than like other chains can.
Yeah, absolutely. That's a good question, and I think a lot of people don't understand proof of work. At least they don't understand the variant of proof of work that we've designed. So there's Nakamoto consensus or Bitcoin proof of work, which is not great. It's old and it is not scalable, to be clear. It is not scalable at all. You could do about 10 TPS on Bitcoin maybe. And that's actually a lot. It's proof of work itself is not scalable in the Bitcoin sense. It just isn't. We don't think proof of stake is very scalable either. You have to centralize the network to scale it well, which is a problem. So, but yeah, but basically the reason that our variant poem proof of work is scalable is because it's broadcast only consensus. That means that when I send a block to the network, a node will know that it is the canonical block. Even if it receives other blocks in the meantime, it will know which one of them is the canonical block, and it'll be able to verify that without requiring signatures, without having to query other nodes. All it is broadcast only. In the case of proof of stake, you have to have signatures from a quorum of nodes. So you have to collect all these signatures, every single block. And if there are times when there's like a fork or two blocks are produced at the same time, you have to determine which one is more valid than the other. And that requires collecting signatures from like a quorum or a majority of nodes across the network, which is a really bandwidth heavy, latency heavy process. And it is not scalable at all. So if you have, let's say you have like 100,000 validator nodes, right? If you have 100,000 validator nodes, you're going to need to collect 70,000 signatures or 60,000 signatures to get to quorum, which is really difficult to do in the span of 5 seconds. Now, it's not impossible, but it does limit throughput significantly because your transactions that are being propagated across the network are going to compete with those 70,000 signatures, right? And that's 70,000 in the span of 5 seconds, right? To be clear. And those have to be broadcasted and propagated across the network, just like transactions do. So they're kind of taking the space of transactions on the wire in the network. And so that's a huge issue. And it's the reason that proof of stake networks can't become truly decentralized. And by truly decentralized, I mean anybody with a computer at home can start up a node and start, validating transactions. In the case of proof of work, anybody can do that. All you need is a node and a miner. So that's, in our case, going to become an ASIC or a GPU. You can start producing blocks and you don't need to collect, 100,000 signatures from across the network to do so. Now, depending on throughput, right, you might want to collect 100,000 transactions in that span of time, maybe less. It depends on the TPS or the throughput at the time. But, and it actually, in our case, it also depends on what type of node you're running, right? There's global nodes and there's zone nodes, and we can get into that as well. But basically, you can run a validating node in Quai. You can be a part of 1 million nodes if that's what, we scale to. And the throughput will still be, on the order of thousands of TPS with no problems. Whereas in proof of stake, once you grow to 100,000 plus validators, it just doesn't become scalable. It just really doesn't. And I think that's going to affect decentralization significantly when you're trying to build a monetary system that can meet the needs of global commerce.
Love that. Great question, Gabriel. I love summarizing it in deterministic versus non-deterministic, really highlighting what Jonathan started with, broadcast only, consensus, or another way we've said it is single round of communication consensus, right? Compared to other proof of work networks that, enter states of block contention and that's a wait for another block, or proof of stake that has to do those many rounds of communication in order to achieve consensus.
Yeah, well, I do remember that. I think it was one of the old Quai University videos on the YouTube channel. Like, I think there's a diagram where Dr. K was showing, like, how much faster it propagates between like 16 nodes if you have only, if it's broadcast only and everybody can independently verify it versus like having to get like, the quorum or whatever. Cool. What just along the same lines, what's the actual, like, I guess both on the live net and then also on like any test nets, like what's the maximum TPS that we've like seen at least like even if it's just like a test net, like I'm just kind of wondering like what are actual like, because I know that you guys did some pretty expensive testing.
Yeah, we had several public test nets. We hit, I think it was 2,400 TPS on our public test net, and that's not like internal. That's not being run on AWS. You know, a lot of these tests are just like internal test nets that they run on AWS or a data center or something. This was a global test net. Anybody in the network could participate in mine, and we achieved 2,400 TPS. But I'm very confident in being able to go much farther than that. Now, going farther than that will require us to create more zones or like add more chains to the network. You know, so that's something to consider. That is how you scale. I mean, I would say 99.9% confident that the way you scale blockchains is by having geographically optimized sets of peers, which are chains. So you have a chain in a certain geographic area, and all of the nodes and the people who use the chain are in that geographic area. So there's low latency between them. We're like very certain that that's how you scale. And when we want to scale the chain, right, when we want to scale Quai, because there's a lot of people using it, we will add more of those zones. Right now we only have one because we only need one. But as we add more, we're gonna scale more. So I'm very confident in our ability to go past 2,400, but that's what we've achieved in a testnet.
Cool. My next question was, I guess I'll ask this one because it's related to this. Something that I was thinking about recently, I was researching like different protocols, and my understanding is that you can still, but you can get, well, basically my question is, would it be possible to use like UDP on both like the node to node, on like, and then also on like even potentially the client side, and like develop our own kind of custom like as needed error correction protocols rather than like TCP/IP? Because I was looking into it and it's like if we really wanted to like start to cut off like milliseconds in transaction time, it seems like that might be possible. I was wondering if you guys had thought of that, or if that's something that like, from the research I did, it looks like that would take like a very heavy development effort. So I could see why that wouldn't be a priority. But do you think that that's something that could be implemented down the line?
So right now, I'm pretty sure the peer-to-peer messaging layer uses UDP and not TCP. UDP is faster for certain types of messages, yes, which is, I'm pretty sure that's what it uses. We use an open source project called libp2p. It's an open source peer-to-peer messaging protocol. I think Go Ethereum uses it now, potentially. They developed their own. Go Ethereum originally used something called dev P2P, which is their custom peer-to-peer protocol or messaging service, but I'm pretty sure they upgraded to libp2p anyways. They might not have, but we did. We upgraded to libp2p, which is a much more efficient messaging protocol, and it uses UDP. TCP is used for the RPC, like the API. So when you query your balance, when you query, the latest block, what are like the latest transactions, stuff like that. That's going to be the TCP protocol, but the UDP is what the peer-to-peer uses. I'm like very certain on that. I didn't write that code; it's open source code, but I'm pretty sure it uses UDP. Now, in terms of optimizations, there's stuff that could be done. The node is not 100% optimized yet. Just to be frank, like we can do things like parallelizing transaction execution for both Qi and Quai. Parallelizing, EVM execution, because it's kind of single threaded right now, so you can multi-thread it. That's definitely something that we've looked into, and we decided it was something we would do in the future for sure, because it would improve throughput. But again, until we receive, like, let's say we're at 100 TPS right now, right? Then we would probably be like, okay, we need to, start working on this because in the next few months, we want to get this out. But we're not at 100 TPS in terms of block demand yet. And this would get us from, like an upgrade like this would get us from, let's say, 700 TPS capacity to probably 1,500. It would probably double it. So probably like 1,500 TPS capacity per zone, per shard. And then if we wanted to scale past that, we could look into other optimizations, but very likely you would probably want to go into the real optimization, which is creating these geographically optimized sets, which is something we already kind of can do, but like, we have to kind of enable it and test it very thoroughly, to make sure that the expansions happen correctly when a new chain is added to the network and stuff like that. That needs to be tested very thoroughly, but it all will work in theory, and in practice, what it will do is scale the network, and that's what's important. Optimizations can only get you so far. At some point, you do have to take advantage of the network itself and the latency and bandwidth between peers. You have to optimize for that, and that's what block reduce does. The block reduce protocol that we developed.
Yeah, so cool. Thank you so much for going into that. My next question was, I was wondering, just for anyone who might be thinking of investing or staking in SOAP, especially early, what kind of assurances are you guys could you give people, and what sort of just from a security standpoint? I was wondering if you could go through all of the steps that you will take. Because from what I heard in, I think one of the spaces in the last couple of weeks was that you guys are adding a lot of lines of code. Of course, and I totally respect this. I know that you guys, to boost productivity are using, whatever I don't know specifically what tools you guys use, but I'm assuming some of them are AI powered. And one of the things that I've been looking into is that there can be security risks with, especially since this is something that's kind of new. So I was wondering, for somebody who might be thinking of staking, funds into SOAP, from the outset, what sort of assurances could you give them that smart contract code is going to be secure, and there isn't going to be some bug that could be exploited and potentially used to drain the entire SOAP staking pool, basically?
Yeah, that's a fair concern. I'm sure there's people that share that concern. I myself am going to be staking, so I also share that concern. So there's a couple of things. Number one is the staking contract itself is going to get audited by a third-party auditing firm. The staking contract itself also is not going to be, a bunch of lines of code that are new. We're actually using a staking contract from, I think, OpenZeppelin, or maybe it's PancakeSwap or something, basically something that's already been audited, right? So there's a lot of these Solidity, staking contracts that already exist out there that you can just reuse. And then, we might make a minimal modification based on, how we want it to work, or what kind of, APY we want to offer, depending on, what we expect the income to be from the Quai emissions or the Quai buybacks. So, there's some consideration there for sure. We want to get an audit. We want to make sure that the lines we change are minimal from what already exists in production use. And so that's the staking contract, right? So we're going to make sure that staking contract is solid. It's not exploitable. And, in the event of an exploit, we will consider our options in that point. We might consider, rolling something back. That's worst case scenario though. I'd really rather not ever have to get that, right? So that's the staking smart contract. And, I can't really say, because I'm one of the developers, one of the co-founders. I can't really say exactly what's going to happen if it does get exploited. I'm just saying, in general, it's something we will consider is, potential rollback, but I can't say that will happen because I don't have the authority, to speak for the chain, right? This is a decentralized project, so it's actually not up to me, right? It's up to the miners. They actually control the chain growth. Okay, so that's the staking contract. Then we have a lot of code that we added to the code base, which is not like Solidity. That's Golang. That is like the GoQuai node software, right? So when you start a node, you're running the software that kind of validates blocks, validates transactions, propagates blocks, all that stuff. And that is where we added the majority of the code. And so there is a lot that we added, to be frank. Now, what we're doing right now is very in-depth testing, very in-depth review on the code that we wrote. Everyone on the team is reviewing the code very thoroughly. And, we're making very small changes based on what we think would make code logic more clear. In some places it's a little less clear than in others, so we want to make sure that, the logic is very clear so that we understand it. Now, we consider doing an audit of this code as well. The problem is it's a lot of code, and it also is not something that code auditing, or third-party code auditors are familiar with. They generally audit smart contracts, like in Solidity or Solana, like Rust or Move VM smart contracts. That's what's traditionally audited. Auditing this kind of code would be pretty difficult, and we're not sure if we're going to get the same kind of benefit from it. It's still something we could do, but it would delay us a long time. An audit, for the code that we did add would probably take another 3 weeks, and we just don't want to delay it that long. So if it does come down to it and there is a bug from what we implemented, we probably will have to do a rollback. That's obviously, again, worst case scenario. We do not anticipate this ever happening. And, you shouldn't even be talking about it, right? Because it's just like, I don't even want to put it out there. I really don't think we're going to have any problems. But, we had the same, talks when we first launched the chain. Like, what if something bad happens? Like, well, if it's a bug related to, consensus logic, then like, the chain's probably going to have to get rolled back, but that's just not something we see happening. We had the same discussion, same considerations when we launched this originally in January, and we didn't have any issues. So hopefully, fingers crossed, we're not going to have any issues again. But just be assured that your funds are safe. Any potential bugs will very likely, if they at all happen, will be in the node software and not the smart contract. So the funds that you have staked in the smart contract will never be exposed to that kind of attack. Really, the issue could be like somebody can mint Quai or something like that, right? If they they find a bug, they can like mint a bunch of Quai. That's like the real issue that could happen. But it wouldn't be somebody, attacking a smart contract or stealing funds from your wallet or stealing funds from the contract. I think that kind of attack is very, very unlikely. Just because the amount of logic changed in the staking contract is very minimal. So we don't, I wouldn't think that would ever like be cause for concern. It really would just be like an inflation bug potentially, if that ever happened. But again, like, we did a very in-depth review, and we're not even done. We're continuing to review the code on a daily basis, and we're continuing to test it. So I really don't think that there's going to be an issue.
Yeah. You guys are great.
I want to highlight.
Oh, yes.
Yeah, I want to highlight two things Jonathan said at the outset here. First of all, AI is not writing the staking contract, and secondly, the staking contract will be audited by a highly credible third party. So I think that's super important.
Yeah.
Yeah, cool. Okay. Just out of curiosity, like for my own sort of technical interest, so basically, like my understanding is that adding SOAP, there's basically three kind of different categories of code. There's the staking contract, smart contract code, and then there's the new node code that would be written in Go that the nodes would have to run. And then you guys also have something like closed source code that is just going to be kind of almost like pool code sort of that you would be running yourself. I'm wondering, are there any other sort of categories of code that you have to write in order to get SOAP online? And also, what are the respective like new basically how many lines of code for each of those? This is just my own like kind of curiosity about the complexity involved.
Oh man. So there is a software that runs between the Quai network and the subsidy nodes. That software is closed source just because we don't need anybody to run it. It's really just going to be run by, a couple of nodes because it doesn't affect consensus. So that means that even if it goes down, the chain will never stop working by any means. It just means that the buybacks could stop for some small period of time until we get it back online, right? So it's not related to consensus, really. So we didn't think, it's really not necessary to open source it just because nobody needs to run it. And there's just downsides. Like if we open source this code, like somebody could try to attack it or something. I mean, we don't want to have to audit more and more code, right? So this is code that, we're just running between the code or between the blockchain nodes and the GoQuai node. And it just processes, these kinds of subsidy blocks. This code, it looks like it's about 2,000 lines of code. And then there is some code as well in the blockchain subsidy nodes themselves. So like, Bitcoin Cash, Ravencoin, Litecoin, Dogecoin, etc. There's some extra code in there to help facilitate, the submission and processing of these subsidy blocks from GoQuai, from the Quai chain. That's just it helps, it improves caching. It kind of caches some of the blocks and tries to resubmit if there's like an error. It kind of decodes them in the right kind of way. That code's pretty minimal, probably like a couple hundred lines there. The majority of changes are in the GoQuai node though. And then that's it, by the way. We have GoQuai, we have this middleware software, and then we have a little bit of software in the nodes themselves, and that's it.
Yeah, I also want to mention, when SOAP goes to mainnet, staking will not be immediately available. That's something that'll come shortly afterwards.
Yeah, that's a good point. We do have to get that staking contract audited and make sure everything's set up to be good to go for staking. So we probably will just do buyback and burn to start or something.
Yeah.
So what was that middleware again? You said about 2,000 lines of code. That's the one that you guys have that interacts directly with the other networks. And then the couple hundred, like, what was that middle kind of section of code? And then also, what's the approximate number of lines of code just in the node, like on the nodes side, the one where you said there's the majority of the complexity?
Yeah, let me find out for you. I was reviewing it the other day, and it was pretty big. So let me see.
Great questions, Gabriel. Just a quick time check. We're running low, and there's a number of others in the chat here. So, is this your last question?
No, but I can like make it the last, or maybe ask. Actually, I think all my other questions were like not even that big a deal. So, um, yeah, I mean, we can make it the last one. Yeah, that's fine.
Okay, thank you.
Yeah, so there's 17,631 lines added, 4,491 lines removed. That is from GoQuai. And then the middleware is just to communicate with the subsidy chains. That's all. And submit templates to GoQuai. That's what it's for. It's nothing like crazy.
Well, is all that complexity, is that really like as much as is needed for like this whole protocol? Like, what is all that?
Yeah, we have to add validation for, all the different proof of works. We have to add controller logic to make sure that the number of shares per block is correct, the difficulty per share is correct. And then we also did some refactoring too. I think we changed some the naming of some things in the code base as well, just to make things a little more clear and easier to read in the code base. So there was just some refactoring done. But the majority of the logic, is validation logic for these new sets of proof of work protocols. So, scripts, SHA-256, KPOW, and ProgPoW. We had to add KPOW in there as well because KPOW and ProgPoW are a little bit different. And then we had to add, controller logic to make sure that the difficulty is correct and stuff like that. It is pretty complex, but we've tested it very thoroughly.
Well, just one last thing. What was how many lines of Solidity code for like the smart contracts out of it? And again, this is kind of just my curiosity, but
Yeah, shoot, I'd have to find it. That's a good question. Let me try to find it real quick. I'm gonna see if I have that. It's pretty small. It's a fork of the Pancake Swap smart contract. I'm pretty sure is what we're working on right now, but we haven't finalized it yet. Let's just move on to the next question. I think I'll find it and I'll let you know.
pretty cool. Thank you so much for answering my questions.
I
Yeah, no problem.
appreciate you, Gabriel. You always ask great questions. Thanks for coming up. Let's see here. Kishore's got a pretty decent list at 11:30. Some of these kind of have a theme to them, so I'll ask them out loud. But I think there's one answer for all of these. First one is, if I use a smart contract for auto compounding, would it be possible to pick different lock durations? Okay, that's one. And then, are buybacks tied to any specific exchange liquidity, or can the system route through multiple venues to reduce slippage? And then there was another one. No, okay, so those two really referring to the staking contract and then liquidity situation for the buybacks. Do you have any thoughts there, Jonathan? I have a few.
So the staking contract, just to answer the previous question by Gabriel, is 400 lines of code. That is the staking contract right now. It's 400 lines. Probably not going to add much. Might actually remove some. There's probably some extra stuff in here we don't need. But right now it's 400 lines. And somebody was asking about the lock duration in the smart contract. Is that what it was for, the smart contract lock duration?
Yep.
Yeah, so we're going to stick with one for now. We might update it in the future, but it's going to be one 30-day lock. And then there's also like an unlock period. So you have like a 30-day lock, and then you want to unlock, and then you have to wait a certain period of time before you get your funds out, basically.
Got it. Next one was, are buybacks tied to any specific exchange liquidity, or can the system route through multiple venues to reduce slippage? I want to highlight the use of a market maker here.
Yeah, use a market maker, right? So it's going to be whatever exchanges they support, which is probably the most liquid ones. So like probably Binance, Ravencoin's on Binance, Bitcoin Cash obviously is there, and then all of them, Dogecoin, Litecoin, they're all on Binance. So yeah, we'll probably just use Binance. But yeah, the market maker is going to choose the most liquid route.
Got it. Rock on. Okay, this one's a controller question. I'm going to skip that one real quick. Okay, we'll go with this one. Do you anticipate mining preference becoming the dominant signal as more algorithms onboard via SOAP?
Mining preference, like in the controller, is that what he means? I mean, I still think the dominant signal for the controller is going to be conversions. They're just going to be much larger in magnitude than mining.
Fair. All right. So number 5, I believe we answered with Gabriel Keytro. Let me know if you have a follow-up there. When SOAP routes parent chain Coinbase to the Quai address, does anything about block timing or ordering affect the staking rewards we get?
I mean, the contract to estimate the APY and stuff like that, the contract and, a logic will use the block time, which is 5 seconds, because there's like a fixed amount of Quai that's allocated per block kind of thing. That's kind of how the contract works. But otherwise, not really. I mean,
yeah.
For Bitcoin Cash, it's it's gonna be harder to find a block, but it'll happen at some point, right? It's not gonna be like crazy. There's variance though. That's important to note, I guess. There's variance. We're gonna get more rewards more often from Ravencoin, and actually, we're gonna get rewards more often from Ravencoin than anything else. But the second to that would be Dogecoin, and then Litecoin and Bitcoin Cash. So rewards from Bitcoin Cash will be a little more variant, like they'll happen, once every week maybe or something, rather than once every day or once every hour,
Got it. Cool. Yeah, I like thinking about that, just kind of like isolating those two things in my head. When it comes to staking, I think the variable we'll want to consider is the amount of rewards that are being bought back. And that does get influenced by hash rate, but the Quai network block times don't change. Nice.
Yeah.
Okay. This is another one we get a lot, so I really want to highlight this. If an ASIC pool pointed a ton of hash at SOAP, would that mostly affect entropy, or could it actually influence block finality? Man, we covered this heavily on our Quai Friday. Any thoughts, Jonathan?
Yeah, what would happen is a lot of the shares would become from that pool. A lot of the shares in the block come from that pool, but there is still a max limit of shares per block for a certain algorithm. So they would dominate the proportion of shares allocated to that algorithm. In comparison to other miners, they would probably get all the shares, and then also the difficulty would go up for that algo. So it would become a lot more difficult to find a share for that algo. And then we would just get a lot of rewards, subsidy rewards, which would be great. And it would become, unprofitable. I mean, depending on how much hash rate they have, it would become unprofitable, or perhaps less profitable than, let's say, Litecoin is for some period of time while that pool's on it. But we do expect pools to add support, and we do expect a good amount of hash rate to come online. So that's just how it's going to go. It's going to start really, really profitable for a few days, and then it's going to become moderately profitable, and then it's going to become, maybe break even, at some point in the future. So, we expect it to always be profitable, just because miners wouldn't mine it if it wasn't, right? But, it's also possible that miners just like Quai and they want to accumulate it, even if it's not necessarily profitable at the current moment to do so. It will be interesting to see what kind of dynamics play out there, but it wouldn't influence block finality, to be clear. It would not block finality.
Yeah, I want to highlight that because it's one of the big unlocks we covered on our Quai Friday is that these ASIC pools are competing for workshares, and they have their own difficulty adjustment. per algorithm, right? So you're initially competing for the number of work shares assigned to your algorithm, and then long term you'll be competing for more shares than another algorithm if you're more profitable. But you'll never be producing blocks on Quai network at this point in time.
Yeah, that's right.
Rock on. All right. Let's see here. So the next one kind of builds on this. I think we answered it, but I'm gonna ask it anyways. Is it easier for an attacker to overwhelm the Kapow side or the SOAP workshare side, or are both designed to be equally expensive? Ooh, that's a great question. Yeah, any
It should
thoughts,
be
Jonathan?
equally expensive. It should be equally expensive. That's kind of what the controller tries to get to. But it really just depends on the difficulties of each algorithm. Like, for example, if SHA is unprofitable and Litecoin is profitable, then that means SHA has just a higher hash rate in terms of energy units. I try to, when I think about this, I try to normalize it to units of energy. So how many units of energy would I have to expend to attack, a certain part of it? And that will differ. Just depends on, what miners like to mine Quai and what devices they like to mine it with. I anticipate in the beginning, if you wanted to, I don't really see how you'd attack it, but let's say you wanted to get the majority of work shares. You'd probably want to choose an ASIC like, script, perhaps. I would expect scripts probably to be the easiest to like take over if you wanted to, but it wouldn't affect the chain at all, right? All you would be doing is mining shares, and you would only be contributing up to block finality. Or like you'd be contributing to chain security, kind of, right? You wouldn't be able to use that in a way to manipulate, the chain. You'd also have to mine Kapow blocks as well, and you'd have to get a majority of Kapow blocks as well to do any sort of like takeover.
Right. No, that's a good point. I love how this just writ large increases overall economic security for Quai Network. Another what was that fundamental denominator you were using, Jonathan? Like units of energy?
Yeah, that's what I say. Units of energy or kilowatt hours, maybe. Every ASIC has a different efficiency, different kilowatt hour per or joule. Usually, what they do is joule per terahash. So you think about a number of joules, like joule per megahash, joule per terahash, whatever. Every GPU, every ASIC has a different number for that,
Right.
right? And that's the real energy expenditure, right? How many joules per hash are you using? And how many joules in general, therefore, would it take to attack the chain? It's gonna be quite a lot.
Yeah. Another I guess variable here I like to think about. Would love your thoughts, Jonathan. It's just the availability of this hardware, right, and the cost of the hardware itself. Comparing GPUs to script miners to ASICs. There's the security is massively increased by isolating these algorithms to their respective work shares and then not letting them all contribute blocks.
Yeah, right.
Rock on. Rock on. All right, let's see here. Quick time check. We're a little over. I'm gonna ask one more and then I'll check back in on Twitter. So let's see here. I think we answered those. This is a good question. I haven't thought about this one yet. So Jonathan, could heavy ASIC participation make lock rewards more attractive, or would it mostly just increase subsidy buybacks? I want to say both. That's my take. What are your thoughts?
Well, there's a flywheel. So in the
Right?
beginning, heavy ASIC participation means more subsidy rewards, which means more buybacks, which means, price go up in theory. But, later down the line, heavy ASIC participation also means it's less profitable for smaller miners. If you have, the really high difficulty on SHA, for example, and you have, a little SHA miner, you'll find shares every once in a while, but it's going to become more expensive for you to find them. It's going to require more energy. That's it, right? So let's say it requires like, I don't know, 1 kilowatt hour to find a share now. If there's a lot of ASICs on the network, it'll require 5 kilowatt hours per share. And that just makes it more expensive, right? But in theory, if this works out, the price of Quai will be higher if the difficulty goes up. So what you'll see is as the difficulty goes up, we get more subsidy buybacks. And that means that the price of Quai has increased, right? Because those buybacks are used to immediately buy Quai off the market. So by the time these miners get the rewards 2 weeks later, the price of Quai should have increased to account for that increase in energy requirement, right? That's kind of how the flywheel works. You mine shares, you get Quai, but the Quai you get is in 2 weeks, and by the time you get in 2 weeks, you got 2 weeks of buybacks happening before you receive that Quai. So now it's worth way more. So even if it looks unprofitable in the current moment, that doesn't mean it's going to be unprofitable in 2 weeks. You just have to wait, right? And we're kind of like forcing these miners to hold because we know that, in that 2 week period, that reward is going to be more profitable than it was when they first mined it. And I think that's also going to make miners realize that just because it's unprofitable now doesn't mean it won't be unprofitable in the future. So we actually might see Quai being slightly less profitable than Bitcoin, because, while it looks slightly less profitable, miners are going to price it out 2 weeks in advance, and that's 2 weeks of buybacks that will happen by the time they get their tokens. So that will be an interesting effect to see. If it works out the way we think it will, you might actually see Quai become a little less profitable in the instant terms, instantaneously less profitable than Bitcoin. But it'll become more profitable when it unlocks, and that would be really interesting to see.
Love it. Yeah, I actually love that question. It's a great question to end on here. Everything points to SOAP just being a net positive for everybody involved, be it users, miners, pretty much anybody who's interested in anything going on here at Quai Network. SOAP's going to be a big unlock for you and allow for a lot of sophisticated actors and some of those potential emerging behaviors that we've talked about in the past. Really just kind of lighting a fire under a flywheel to take this to the next level. So that was a great question to end on. Really appreciate Kishore, Noah, Gabriel. You guys rule. Love all the deep dives you guys are doing on your own. Love to see you guys hanging out in the community. Shout out to all of you guys out there in the community. Kiri, Rob, we got where'd he go? There he is. Pavel's back. Ink, Kusarito, Ibo the Third, Axton. You guys absolutely rock. Marisol, can't forget you guys. And for those of you hanging out on X, I went and peeked. I don't see any questions. So, any final thoughts? And then we'll start to wrap it up. Go ahead, Jonathan.
Yeah, thank you guys so much for the questions. Thank you for listening. Thanks for tuning in. And thanks, Matt, for the questions and helping out. And we'll see you next time.
Absolutely. Awesome. Thank you so much, Jonathan. Really appreciate all the work you guys are doing. Guys, I know a lot of you are requesting to see Game of Pointers up here on a dev Q&A. We're working on it. The man is one of critical core devs over here at Quai Network, so totally understand why you want to hear from him. We'll get him up here as soon as possible. Might need a short break because he's burning some mad midnight oil for us as well. But Jonathan, love your takes. I know the community loves it as well, so can't appreciate you enough. And Dr. K for all the time you've been able to share with us today. We do these every Monday, everybody. So if you're hanging out with us on X, feel free to swing by the Discord next Monday and hang out with some of the OGs in the chat here. The conversation about AI is really entertaining, so don't want to miss out on the next one. Next Monday. Tuesday, we'll be doing another Quai Nation space where you guys can come up and speak and share what you got cooking over here on Quai Network. We'll do a tech AMA with Dr. K on Wednesday, and we'll definitely share some meta thoughts on Quai Friday per usual. So we got a lot going on around here, guys. Project SOAP is right at the finish line. Expect to see that coming to testnet any minute now. Any minute. I joke. It might be a little bit later than a minute, but it's real soon, guys. I promise. So if you're new around here, definitely give the Quai Network account a follow. I see a bunch of people sending Quai all over the place on X. So if you need to get your hands on a bag, go sign up at kipper.money. You get some Quai just for onboarding, and then engage with the community here on X to earn even more Quai. The Tangent integration is complete, guys. So secure those bags.